Welcome to Rach Tribe. Let's kick things off with a question, a really important one that most of us never even think to ask. We all work hard for our money, right? And we're taught that tucking it away in a savings account is the smart, responsible thing to do. But what if I told you that by just saving, you might actually be losing money every single year? I know. You're probably thinking, wait a minute, losing money? My bank balance is going up, so how can I be losing anything? And honestly, that's a totally fair question. So let's pull back the curtain on what's really going on here, something I like to call the savings trap.
Okay, so look at it this way. On one side, you've got your savings account, which might be earning you, what, maybe 3 or 4% interest if you're lucky. It looks safe, it feels steady. But then there's this invisible force called inflation. Think of it as the stealth wealth killer. That's the rate at which everything, groceries, gas, you name it, gets more expensive. And that rate is often way higher, maybe 6, 7, even 8%. So do the math. Your money's growing a little, but inflation is taking an even bigger bite. It means your money buys less and less each year. It's like you're on a treadmill, you're putting in the effort, but you're slowly sliding backward.
And that really gets to the heart of it, doesn't it? Saving your money and actually protecting or growing your money are two totally different things. To really build wealth, to secure your future, you need something that doesn't just tread water against inflation. You need a tool that can leave it completely in the dust. So, what's this powerful tool? Well, for a lot of people, it's the stock market. And yeah, I can already hear the alarm bells going off. The stock market? Isn't that super complicated and risky? Isn't it just gambling? That's a huge misconception, and we're going to clear that up right now. Okay, so first things first, a stock is not a lottery ticket. It's not some random piece of paper. When you buy a stock, you are buying a small piece of ownership in a real, actual company. Think of it like buying a single brick in a huge, profitable building. As that company grows, as it makes more money, the value of your tiny piece, your brick, grows right along with it. See, you're not gambling. You're becoming a part owner in businesses you know and maybe even use every day. And this is precisely why stocks can be such an incredible weapon against inflation. Think about it. When the price of, say, your favorite soda goes up, the company that makes it can raise its prices. That can lead to higher profits. And because you're an owner, a piece of those profits belongs to you. Your investment's value can grow. Over the long haul, the growth of solid companies has historically crushed inflation, meaning your ownership stake grows in real, actual value. But look, just beating inflation, that's only part of the story. Now we get to the really exciting part, the real magic. This is the engine that truly builds wealth, a concept so powerful that it's been called the eighth wonder of the world. We're talking about compounding. So what exactly is this whole snowball effect people talk about? It sounds kind of cool, but what does it actually look like? Let's take a look. All right, check this out. On one path, you have simple growth. That's linear. Your investment earns a return, and that's pretty much it. It's a slow and steady climb. But then you have compound growth. This is where your returns start earning their own returns. It really is like a snowball rolling down a hill. It starts small, but as it rolls, it picks up more snow, gets bigger, and starts moving faster and faster. That exponential curve, that is where serious wealth is built. You know, this quote just says it all, doesn't it? He who understands it earns it. He who doesn't pays it. It's so true. When you get how compounding works, you can put it to work for you. But if you don't, it can work against you, like with high interest credit card debt. It's the same principle, just rolling in the wrong direction. Okay, so at this point, you're probably thinking, compounding sounds incredible, but you probably need a ton of cash to start, and you have to be some kind of genius who knows exactly when to buy and sell, right? Well, that's another huge myth we need to bust. The truth is, trying to time the market, predicting the absolute perfect moment to jump in or out, is a losing game for pretty much everyone, even the pros. What really matters, what's been proven over and over, isn't timing the market, it's your time in the market. It's all about how long your money has to just sit there and do its thing. And this right here, this is mind-blowing. Let's look at two people. Investor A starts at age 25 and invests for just 10 years. They put in a total of $50,000. Then they stop. Investor B waits until 35, but they invest for 30 years, putting in a whopping $150,000, 3 times as much money. But guess what? In many cases, Investor A, the one who invested less but started earlier, ends up with more money by age 65. That's not magic, folks. That is the raw power of giving your money more time to compound. And just to put a number on it, look at the cost of waiting. By delaying a $10,000 investment by just 5 years, you could potentially miss out on over $22,000 in growth. Think about that. That's the real, tangible price tag on procrastination. You know, there's that old saying, the best time to plant a tree was 20 years ago. The second best time is now. It's the exact same with investing. Every single day you wait is a day your money isn't working for you. The message couldn't be clearer. Just start. The sooner, the better, even if it's just a little. All right, if you're ready to stop just saving and start actually growing your wealth, now is a great time to show some support and subscribe to the Rich Tribe channel. Go ahead and like, comment, and share this with someone who needs to hear it. Okay, let's get to our final and maybe most important point. There's this huge misconception out there that investing is only for rich people. And that's just not true. It's a tool that's available to anyone who wants to build a better, more secure financial future. So you might be asking, okay, I'm sold, but how do I actually get started? It's honestly simpler than it sounds. Step 1, start small but be consistent. We're not talking about huge amounts. Even a little bit invested regularly can grow into something significant. Step 2, put it on autopilot. Use tools that let you invest a small, fixed amount automatically. This builds discipline and, more importantly, it takes the emotion out of it. And finally, step 3, think long-term. Forget about the daily news and the market's ups and downs. Focus on where you want to be years or even decades from now. So you really don't need a huge chunk of money to begin? Nope, not at all. It really boils down to this. Financial freedom isn't some big secret that only a few people know. It's a strategy. And that strategy is all about consistency, not about how much you start with. And really, that brings us to the final question. You work incredibly hard for your money every single day. So, isn't it time you let your money start working just as hard for you?